Alright, now we look at question 3. Now, okay, the first 15 marks we're going to do. Then the 5 marks we can't do, okay, because we've not studied this. Okay, A, they ask us for 5 sources of information that would be used in gaining understanding of sunflower. And for each source of information, describe what you expect to obtain. And then B, using information provided, describe 5 audit risks and how auditor responds to each risk. Okay, Sunflower Stores operates 25 food supermarkets. The company's year-end is 31st December 2012. The audit manager and partner recently attended a planning meeting with the finance director and have provided you with the planning notes below. You're the audit senior. This is your first year on this audit. In order to familiarize yourself with sunflower, the audit manager has asked you to undertake some research to gain an understanding of sunflower, so you'll be able to assist in the planning process. He has then asked you to identify relevant audit risks from the note below and also consider how the team should respond to these risks. Okay, so this first 2 paragraphs is basically the starter to introduce what happened. And then for part B, this is what you're going to read, the case for the risk. Okay, now Sunflower has spent 1.6 million in refurbishing all of its supermarket. As part of this refurbishment program, their central warehouse has been extended, and a smaller warehouse which was only occasionally used has been disposed of at a profit. In order to finance refurbishment, 1.5 million was borrowed from the bank. It's due to be repaid over 5 years. The company will be performing a year-end inventory count at the central warehouse as well as at all 25 supermarkets on 31st December. Inventory is valued at selling price less an average profit margin, as the finance director believes this is a close approximation to the cost. Prior to 2012, each of supermarkets maintained their own financial record and submitted returns monthly to head office. During 2012, all accounting records have been centralized within head office. Therefore, at the beginning of the year, each supermarket's opening balances were transferred into the head office accounting record. The increased workload at head office has led to some changes in the finance department, and in November 2012, the financial controller left. His replacement will start in late December. Alright, so the first part does not relate to the case. Now, to answer part A, okay, to answer part A, we need back some of the theory that we learned. Now, when you talk about understanding an entity, can I know exactly what do you need to know about entity? There's a mnemonic that we use, right? Which is what? Huh? The one? Which mnemonic? The one? Yes, REIN, REIN, and PROS, AP, PROS, IC. Okay? Now, these are the things that we need to know, correct? So now, where are you going to find them? Is it you just stand there and then you look at the ceiling, then poof, boom, accounting policy drop in front of you. Then look at the ceiling again, poof, internal control, boom, drop in front of you. 是这样的吗? Huh? 是吗？不是 right? Then where you gonna find this? There must be somewhere, right? Correct, no? For example, if you want to know about their internal control, where can you find? Okay, you can read their accounting and internal control manual. That's a source, okay? So go and read. You want to know about risk, objective, strategy. Since you talk about strategies, you can say I can read minutes of the board meeting, because usually that's where they discuss important strategies. Now these are examples of how you link this to what examiner wants, because she is asking you for sources. That means she is not just asking you about what are the things that I want. I want to know where do you get them. Can you see not? So this is what you must do here. The sources of information, and then the understanding expected. Okay, now not everything you can get them on books one. Okay, so that's why some of the things may need to be from discussion. Okay, so for instance, I may have a discussion with the governance and the management team. And what kind of things that I can know from having discussion? Well, there's so many things you can really know from having discussion. For example, like from here, we can obtain information regarding the supermarket retailing industry. Okay, so it's about the industry information. Now, you want to know the details or nature about their business. So where can you look at nature of their business? For example, you may go to even their website. You may even read their annual report. You know? So this example of what you do. Okay, you can read their annual report of Sunflower. Now this will help us to obtain a brief introduction regarding the business nature that Sunflower operates in. Okay, now annual, okay, I think I'll use annual report. I will read the financial statement for the 2011 year end. Okay, the prior year. Now this will provide detail of its prior year financial results, as well as the accounting policies adopted which are disclosed in the financial statement. Right now? Now, I can read the minutes of the board and management meeting. Now, this will give us, provide information to key decision, including like business strategies, significant events, the key risks to the business that they will discuss. Okay, now we can read the accounting and internal control systems manuals. Now these will contain information about sunflower accounting and internal control systems, like its policies, procedures, charts of accounts, organization structures, all these things. Okay? Now, so if you know what is understanding, as in you know what is RAIN AP Pros IC, then you know how to answer this. Okay? Because they're just asking you that from where you're going to get this information. Huh? Now, the only thing obviously that you probably get stuck is when you start to say sources of information, then you start to think what they want. Okay? Now, but if you try to use from a very plain way of understanding the requirement, is from where you're going to get all this information. Okay? Alright, so this is A. Now, we're going to look at B. See, what they want us to do now is, as usual, they ask for 5 risks. Okay? They ask for 5 risks and how you're going to respond to these risks. Okay? So when you read the case study, and again, you can see there are quite a number of issues. Okay, now, so same thing. You just run through the case. You put the numbers at the side, which one that you believe is a risk. Okay, so the more you identify, the better it will be. So it will be easier for you in the exam. Okay, now try this. Which one that you would think as risk? Okay, now think 25 supermarkets is quite obvious it's a risk. Supermarket by itself is already a risk, because when you run supermarket, there will be risk of people stealing. Not only the customer, the staff, all these are the problems that we have. Okay, the inventory nature is a risk. Okay, now they are refurbishing their supermarket, so a huge amount will be spent. So obviously when you start spending all this amount, then you have to be extra careful. Okay, this can be a significant event, whether you treat the cost correctly. Okay, now then they mentioned that for this they have actually disposed building. Okay, now disposal of building, which can also be a significant event because of the huge amount involved. And obviously you have to make sure that everything is treated properly, like have you removed the asset from the account, have you calculated gain or loss correctly. Okay, now have this been authorized. So these are all important things. Okay, these are all significant events. Now they borrow money from the bank, and obviously borrowing money is also significant because of the huge amount involved. They have a loan that they will pay every year for 5 years. So the treatment is together with the loan. The treatment of the account is you have to split the portion of the loan that is current and non-current. Okay, and then when you borrow money, I'm not sure whether you're going to charge any securities. So will that affect your so-called the disclosures? All right. Now then the inventory valuation approach, you can see is not based on the lower of cost or NRV. Okay, so there's another issue. Then they did mention that the change of all the systems they had has created a lot of workload with the head office, and then the finance controller has left. So all these are examples of issues that is increasing the risk of in the company. Okay, now so we can use all these points to write. So it's just 5 problems that we're having here. Okay, 5 audit risks. Now I would put down separately as risk of the methods, and then the response. Okay, because the word audit risk is too general to me. Are you referring to detection, or are you referring to risk of which two risks can be very different? So in that case, I would split. Okay, I would split. Now, so first of all, I would put down the nature of sunflower as a large chain of supermarket business where its stocks are exposed to high risk of pilferage, okay, so a lot of inventory quantity could be stolen, leading to the inventory record in the accounting system be materially misstated. Now, so my response would include to put more reliance over observing an inventory count at the year end to confirm accuracy of your inventory quantity. Okay, So this is one to do with the nature. Alright, now the issue with their borrowing, let's say, Sunflower has borrowed 1.5 million from the bank. So please don't explain regarding what pressure to manipulate account. They already borrowed. And going to borrow is different. Okay, they have got the loan. So now the issue will be different. Okay, so the loan shall be correctly accounted for, and any debt covenants with the lender must be fulfilled. So failure of this can cause financial implication to Sunflower. So part of my response would include to read the loan agreement to determine details of the borrowings. Now, you may consider getting confirmation from the lender, and then with the evidence obtained, assess if the loan is correctly treated. Example, like, have they disclosed adequately? Okay, now that's the issue to do with the loan. Okay, that's the issues to do with the loan. Okay, the inventory valuation. Now, Sunflower has adopted an inventory valuation approach by using selling price less average profit margin, and this actually departed from the accounting standard, where the inventory shall be valued at lower of cost and NRV. Of course, you don't follow the accounting standard, but if you can justify why you are doing it, it's allowed. Okay, because if you believe the method that you use will give a fairer basis, okay, will give a fairer view, a true view to the reader of the financial statement, then you should go ahead with your method. But obviously in this case, I don't see the logic why you believe this is fairer, because what's so difficult to maintain the cost of so-called your product, and then you should understand that end of the day, these are supermarket product, prices also does not fluctuate so much. So in that case, I think that the basis may not be so well justified. Okay, so my response would be, okay, before that, so if the approach is not acceptable, it would cause misstatement in the financial statement. Now we should discuss with the finance director, the guy that say that is the finance director, for his basis to value the inventory. Consider if there is valid justification. Now we probably need to determine the value of inventory if it's valued at the lower of cost and NRV, and quantify, scary, playing drum, okay, King Kong organized party, playing drum, alright, and then quantify if there would be material misstatement. 啊？没有什么？就会有天灾。这种是大转变之前的那种新灯来的。我们两个是party什么？party fortune teller 啊 ，OK， 你要听我们话 ，alright。Now, so that's the issue about the valuation, okay? Okay, the fourth issues we can mention is about the workload, alright? Now, the increased workload in the head office can actually cause them to overlook on a lot of matters, and that would by itself increase the mistakes in their account, okay? Now, the change in the accounting system has increased the workload at the head office, okay? And this can cause necessary control to be weakened and increase the risk of oversight. For example, like transactions be left unrecorded. Okay. Now, not only that, they also mentioned the finance controller is leaving in November. Okay. Further, the FC is leaving in November. I got no space, so I ... Okay. That means in that month, there will be no person there to oversee a lot of financial related issues. So this is where the risk is increased. Okay. So in that case, what would our response be? I think we need to re-evaluate the systems there and see whether the control is actually good for us to rely. So we will require careful assessment of Sunflower's internal control system to establish if combined approach be used, or reject relying its internal control system? It's the first audit to us, so we probably need to be more careful. Alright, now not only that, then they did mention that November there's no FC, so you probably have to remind your audit staff to be more cautious for the period when the FC is not available. Okay, so these are the period that potentially there'll be more mistakes, more problems. Alright, okay, so I've touched on 4 things about risk of MM. Okay, so I want to leave one last answer to do with detection risk, so that is to show you that we don't necessarily have to talk about risk of MM alone. Now, the detection risk issues that I would suggest is the issues about the inventory stock take. They're going to do stock take in 25 supermarket as well as the central warehouse. Now, are you going to visit all the supermarket and the warehouse and observe the stock take at the same time? Or are you just going to pick and mix some of the warehouse? So end of the day, whatever choice you have, it affects your detection risk. If you've chosen to see all the warehouses, then you reduce the detection risk. But if you have chosen to only attend some of it and not the rest, then your detection risk is increased, because you never know for those warehouses that you don't visit, the inventories are there or not. Okay, so this is the last point that I can put in. The 5th issue. Detection risk. Sunflower will carry out inventory count at 25 supermarket and its central warehouse at the year end. Such a big coverage increases difficulty for auditor to observe all the inventory count. Okay, and for those auditor do not observe, it increases the detection risk. So my response would be, consider if there is a need to visit all of it. If it is necessary to visit all the location. Now, if you think that visiting all is not required, then out of the 25, which one you're going to go? Then you probably may have some criteria, which is part of your planning. For example, you have one supermarket in KL, huge one, you don't want to go. You want to go to one kampung one, small like a shop lot, then the one you want to go. Then it doesn't make sense already. So that's why at the end of the day you have to plan. Okay, so if not all the locations are visited, auditor shall determine the criteria to select which one to visit. For example, like maybe the materiality of the inventory level. Okay, now so this is the part to do with detection risk. Now in fact, you may also introduce, like if you suspect fraud in the client, you may even have element of unpredictability. Maybe you tell them that you're going to visit 3-4 warehouses, but then at the same time you're going to visit the rest of it. Okay, now all these are the issues that we do here. Okay, right, that's your B. Now C is about factors you're going to establish internal audit, so I'm going to skip that. Okay, can we turn to question 5? Okay, show you questions on finalizing audit. Okay, now in question 5A, now they ask us to explain the purpose and the procedure for obtaining written representation. So there are two things that you put in over here. Now B, the directors of the company have provided the external audit firm with an oral representation confirming that the bank overdraft balance included within the current liabilities are complete. So what do you think about relevance and reliability of this representation as a source of evidence to confirm the completeness of the bank overdraft? Okay, so the first part is the theory. Now they're asking us to put down the purpose of representation and then the procedure. Okay. Question 5. A, purpose of representation. Now what's the purpose of representation again? It's as a what? It's as a form of evidence, right? So the purpose is to get written representation as a form of audit evidence. But this form of audit evidence is what evidence? Is meant as management to confirm two things. Agree? Okay? So you must say carefully, it is meant for management to confirm. Now what's the two things that we say 3 days ago? 2 days ago, yeah, 3 days ago. What's the two things? It's to confirm that it has fulfilled its responsibility. Okay? Of course, in the representation letter, if we say you fulfill responsibilities as what we agreed and stated in the engagement letter. But when you explain in the exam, you don't say like that, that you fulfill responsibility in the engagement letter. That means you don't understand, you don't know what is it. So you must elaborate on what responsibilities is that. Okay? So you must put down the responsibility, which is what? Prepare financial statement that's true and fair, and for internal control. Some more, it has provided auditor access to information and personnel necessary for the audit to be carried out. Some more, as a way of confirmation to matters where other sources of evidence are not available. Example. Now, what are those things that usually we get them to confirm? Things like subsequent event, accounting estimates, compliance of law, going concern. Now, you just got to give example to explain. Now, that's purpose. Okay, so purpose is very simple, that's all. Now, they ask us for procedure. So normally if you are asked representation, what procedure do you do? So that will include asking them that you need a representation, okay? But before you ask them, usually we will prepare a representation for them because it's easier that way, okay? So what auditor will do, auditor can prepare a specimen representation and request management to use such content and provide the auditor a written representation letter. Now it has to be in a letter. That's what the standard says. Okay, so you must prepare it in a letter. Now the representation will be prepared in their letterhead. Okay, so it is prepared on the entity's letterhead, and it must be signed by who? The CEO, the CFO. And this representation is addressed to the auditor. It is addressed to the auditor, and it is dated not later than the date of the audit report. That's it, procedure. So you just got to write down what you're going to do to get. Understand? Okay? Alright, so this is part A for the 5 marks. Alright, now we look at B. Now they are asking two things here in B. Relevant and reliability. Okay? Relevant and reliability. Now, see, nothing about sufficient is about relevant and reliability. So relevant reliability is the measure of what? You're measuring the evidence must be sufficient, and the other one is appropriate. So they are actually asking you appropriateness of the evidence. So they say the director confirmed verbally that the overdraft balance is included within the current liabilities are complete. Now, how relevant is that? So what is relevant over here? So the relevant is whether you support the assertion that you want. You see not? So the assertion here is complete. So whether a person tells you that this is complete is relevant. Now this is obvious, okay? So everything that a person say must be relevant to what he wants to say, okay? So if he say complete, then it's relevant to complete, follow not, okay? So if the issue here about relevant, on the oral representation. Now, confirming that the OD balance has been included within the current liability is relevant to the completeness assertion. So there's no issue about relevant. Okay, so relevant is definitely there. Now, reliability of the evidence depends on what? Now, it depends on source as well as nature. Okay, so first it depends on the source, then it depends on the nature. Now, the source, see, oral representation is from management and internal source. So it is the weakest source as compared to external generated or auditor self-generated evidence. So that's the issue about reliability. So the source is very weak. Now, the nature. See, even oral is the weakest nature. Management can always deny subsequently that they did not say what they have orally agreed. So in this form, then we can understand that an oral representation is not reliable. Okay, so that's what you want to do. Explain the relevant, the reliability. So it's linked back to evidence. Right, see here. Okay, they've given us two issues, and they say for each of the issue, they would like us to, number one, discuss the issue, including an assessment whether it is material. So you must have in your answer telling whether you believe this is material or not material. Now, number two, you should recommend procedure that the audit team should undertake at the completion stage to try to resolve the issue. And number three, describe the impact on the audit report if this issue remain unresolved. Now, the total marks will split equally between each of the issue. So we got 6 marks each. Now, the audit report extracts are not required, so you do not need to explain in detail the wording. Okay, so you just need to talk about the impact. Okay, you are the audit manager of Violet, and you are currently reviewing the audit files for several of your clients, for which the audit fieldwork is complete. Now the audit seniors have raised the following issue. So we have Daisy Designs. Now Daisy's year end is 30th September. However, subsequent to the year end, the company's sales ledger has been corrupted by a computer virus. Daisy's finance director was able to produce financial statement prior to this occurring. However, the audit team has been unable to access the sales ledger to undertake detailed testings of revenue or year-end receivable. Now, all accounting records are unaffected. There are no backups available for the sales ledger. So the Daisy's revenue is 15.6 million, the receivables is 3.4, the PBT is 2 million. Now, so this is an issue of failure of getting evidence. Okay. Now, three things that you must explain in each part. So the first one is number one, the issue and the materiality. Now, what issue is this? Now, the issue is you just got to explain back what you see in the case. Now, they have mentioned to you that Daisy's computerized records were infected by virus, thus corrupted. So audit testing of sales and receivables are not possible. Okay, that's the issue. Now the issue must have an assessment to the materiality. See, the receivable balance is 3.4 million, which is 100%. %70% of the PBT, while the revenue is 15.6 million, which is 780% of PBT. Okay, so the size of the potential misstatement, if any, is material, and in fact it's beyond material. It's so big, you know, so it's so obvious that it's so big. In fact, it is considered material and pervasive. Okay, so that's first part, just to evaluate the issue and is it material. Now, the second part that they want us to do is your procedure. Now, so the procedure would be, you have the records corrupted, but do you have any hard copy? Okay, so that really depends on, I don't know what systems that they're having. They didn't say. Okay, so you probably will have to look for any alternative. So we will first discuss with management if there is any means of the data be recovered. So you probably need expert from the IT side. Now besides that, then if it's not recoverable, consider if there is any alternative audit procedure to test the sales and the receivable balance. For instance, through inspection of the source document and maybe from subsequent receipts and confirmation with the receivables. Okay, so is all these things possible? Now sometimes it could be possible, but the question is you may not have the time, because probably they need a very long time to reconstruct. So if you want them to finish all this and rush it before the due date, they tell you it's impossible. Okay, now so a key issue could be all the above may not be available on time for auditor to complete the audit. Okay, in that case, what will the impact be to the audit report? Now this becomes a failure of getting evidence. Okay, so auditor has failed to get sufficient appropriate audit evidence regarding the sales and the receivable. Now the potential misstatement, if any, is material and pervasive. So if you think that this is something material and pervasive, then the opinion that we give will be a disclaimer. Okay, so we will say a modified opinion is expressed by disclaiming auditor's opinion. Now, so if you disclaim, then you must explain the keyword. Okay, so auditor will indicate that because of the significant effect due to the failure above and audit opinion is not expressed. Okay, right, so this is how you do it lah. So you just gotta explain, modify, what opinion, what's your keyword. Alright, so that's to do with basic design. Okay, we see the second case. Now, this case says that the company experienced difficult trading conditions. They have lost significant market share. Cash flow forecast has been reviewed and shows a significant net cash outflow. The managements are confident that further funding can be obtained. and have prepared financial statements on going concern with no additional disclosure. Now the senior is skeptical, and prior year financial statements show there's a profit before tax of 1.2 million. The current year loss is 4.4 million. The net cash outflow is 3.2 million. Okay, so same thing. Now you got to go into explaining the issue. Now this issue that we're seeing here is to do with the going concern. Okay. Now the company is facing uncertainty over its going concern. Okay. Now what's the uncertainty? Because we are not sure whether the loan is obtainable. As you are not sure if the loan is obtainable. And with uncertainty, disclosure is required. Okay. Now if you look at the materiality wise, see the figure given is the 3.2 million outflow. Okay, now the outflow is for the coming 12 months. That means this 3.2 million out of 4.4 is about 73% of its present level of loss. Okay, and in fact if you take 3.2 out of the 1.2 million profit of the previous time is about 267% of the previous year profit. But anyway, the figure is a bit strange because in the first place, disclosure is not supposed to be quantified, because we learn materiality as something that you can base on qualitative and quantitative. But I think examiner wanted to give some numbers so that you can have numbers to explain. Okay, because even you don't give me the numbers also, it's already material, because this is going concern uncertainty. You have to disclose, it's a requirement. Okay, now so that's the issues that we see here. So it's definitely material if for company to disclose. So what procedure that you can do over here to resolve the issue? Now actually whether or not to disclose depends a lot on how sure that the funding can be obtained, because the funding management only say they are confident. So what we need to do is get evidence. So we probably need to discuss with management about the certainty of the funding. Now we want to ask for evidence, like maybe if you can give any letter of offer from the bank which can confirm that they are giving you the loan. That would be good. Okay. Now then, if there is no concrete evidence to prove the certainty of the loan offer, then you must discuss with them regarding the disclosure. Okay, so they have to disclose. Okay, they have to disclose. Right, so for the third issue is the impact to the audit report. Now, so if the matter is not resolved, then we can see the issue is there is completely no disclosure at all in the financial statement. Okay, there's no disclosure at all in the financial statement. Now, if the 3.2 million outflow is so huge that it's capable of causing the company to close down, plus you've completely not disclosed, then this becomes pervasivity. Okay. Now, so if the 3.2 million of outflow is so significant that it can cause the business to go bankrupt, then the disclosure is necessary, and lack of disclosure, I shouldn't say lack, omitting the disclosure should be pervasivity. Okay, that's why in the note we see the standard gave us two examples. One is they disclose a bit, one is they totally don't disclose. That's why here the examiner say no disclosure. So if no disclosure, then you might go to the other side, that disclosure is not given. Okay, now in that case, an adverse opinion is given to say that financial statement do not give true and fair view due to the omission. Okay, right, so that's the question 5. Now, so I won't do question 4, but I just go through with you quickly. Okay, tell you what is in question 4. Now, question 4, it says over here that explain the 5 fundamental principles. Now, the 5 fundamental principle is your COPIP, okay? Okay, then in part B, they ask for substantive procedure that you're going to do for the procedures over here. Now, so the first part is to do with the payable. Now, Rose operates a chain of health and fitness club. Its year end is 31st October. You are the manager and the year end is due to commence. The year end audit is due to commence. Now, the first issue is they say the finance director notified you that an error occurred in the closing of the purchase ledger. Rather than closing on 1st of November, it accidentally closed 1 week earlier on 25th of October. So all the invoices received between 25th October and the year end has been posted to the 2013. So this is a risk that your purchases and your payable could be understated. So it's a problem of cut off that we see over here. Can you see now? Now, usually in this type of issue, what kind of things you're going to do? Now, I believe you must explain to them that this is a mistake, and obviously you must first correct the mistake before we do the audit. Okay, so you have to request them to do a correction. Now, probably after you do the correction, you're going to start checking. Now, when you start checking, you will still have that kind of feeling that maybe you didn't correct everything nicely, or you didn't correct, you ignore it. So that's why it might be good for us just to use analytical procedure to test their payable days. Because if you have left out a big chunk of your payable, the payable days will be affected. Okay. Now, so you might want to use payable days for that. Then after that, you do need to test cut-off. So you have to go for all these GRN, or the delivery order of the goods that you receive before the year end. So within the period, maybe from, like they say, 25th of October up to the 31st of October. So all these lists of goods that you receive, trace to the invoice and make sure that you record them in that year end. Okay, so all these are the main things that you must do here. Now that's to do with the payables. Okay, now receivables, they say receivables have historically been low, as most members would pay monthly in advance. But during the year, a number of companies have taken up group membership at Rose, and therefore receivable balance is now material. Now, the senior member has undertaken receivable circularization for the balances at the year end. but there are a number who have not responded, and there are a number responses with differences. Now, so what are you going to do with those who have not responded? So the things is very simple. Right? You're going to ask permission to confirm once more. So if you confirm once more, there's still no response, you will try alternative means. For example, you might want to call them. If you call them also fail, then you're going to use alternative procedure. For example, you will do subsequent receipt. So all these are the things that you're going to do if they have not responded. Now, if the number of response are different means you have exception. Then you must ask them to reconcile. And after you reconcile, you have to prove that these balances are correct. So you could give example, like maybe it's goods in transit. Then what are the evidence you want to see to prove it? Can you see that? Okay. Now the last one is the reorganization. Now company recently announced its plan to reorganize its health and fitness club. Now this will involve closing some club for refurbishment, retraining some existing staff, and disposing some of the surplus. Now the plans were agreed at the board meeting and announced to shareholders on 29th of October. So they proposed to make a provision in the financial statement. So to provide for it, then the important is you got to make sure that it's true that all these things is already agreed and announced by the year end. Because if all these things is not by the year end, then the conditions of evidence does not exist. So that's why they mentioned to you that this is in the board meeting. So I think it's very important that you must see that this is in the board meeting. And then we also notice that they say this announcement has been made. So if announcement made, then it goes to the public. So it's important that we must look at the announcement, that is it there or not, okay? So if these two confirm, okay, then fine, I will agree with the provision. But when you say you agree to the provision, then the question now is the provision is what? Is made up of what? So that's why you must go into the list of what goes inside, and then you will have to test whether the individual item should include the cost or not, okay? Like for example, the refurbishment cost that goes in, okay? So what cost can go in, what cost cannot go in, okay? So you must go through the list and see whether the amount is reasonably estimated. So if let's say the refurbishment, you expect that you're going to spend 10,000, you cannot be providing 20, 30,000, okay? So all these are the things you're going to do, okay? Now, so the overall is that, okay? But you just going to write down procedure in more detail, okay? So that's your question 4. Okay, so I done and go through the 5 questions of the last exam.